And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we put you in front of where the action is in the broader markets, as always, with an eye toward helping you prepare not only for next week, but for beyond as well. I want to start by saying Happy New Year. Missed talking to you guys over the last couple of weeks, but there certainly has been a lot going on, and we're going to cover a lot as well. We're going to take a look at the current markets. Where do they stand at this time? What we can look forward to going forward. And then also what the blue wave means for the markets. Of course, everyone is aware of the election and the Democratic sweep, and there are some sweeping changes that are taking place within the below the surface of the markets. We're going to get into that. Also, take a look at stocks that are at new highs. There's a fair number. And for those of you that own those stocks, you'll want to know how you can have some rule-based systems to trade them and whether you should stay with them. Also, we're going to take a look at down and out stocks that are beginning to just now turn from their lengthy downtrends. This market is, as I mentioned, shifting a lot, but a lot of ships are rising with the tide. So we're going to take a look at some of those potential turnarounds there. And then also stocks breaking out of bases. And of course, with my work, my background with William O'Neill and Company, I am always on the prowl for stocks that are breaking out of bases in conjunction with strong growth prospects or some news that it would be a catalyst. So we're going to look at that, but let's take a look and begin by sharing some of the news this week that certainly drove the markets to new highs. And of course, we talked about the Democrats taking control, if you will. Another item that occurred this week is we did see U.S. oil futures now above $50. This week, earlier in the week, we did hit that milestone, and first time in 11 months. I'm bringing that forward. We're going to get into why that number is critical, and then also look at some of the underlying stocks within energy. Also, we did see the 10-year Treasury yield jumped back above 1%. In turn, we saw a sharp rally in some of these bank stocks. We'll get into that. And then manufacturing data still comes in really quite strong. December PMI, strongest growth since September of 2014. So nice economic strength in the backdrop. Today, we did get a U.S. jobs report for December. About 130,000 jobs were shaved. So it did end a 7-month period of job growth, but the markets are looking elsewhere. So we're going to take a look at just what the market's focus is. The news was not met with entirely a bad response. So we're going to take a look at, as usual, the daily chart here of the S&P 500. And from my work, I want to see how this index is behaving during this period of uptrending, where it is relative to this 10-day simple moving average. If it's above an upward trending 10-day, that for my work indicates a strong uptrend. We also have these outside momentum indicators, your RSI and your stochastics, heading upward in positive territory. Markets hit yet another new high yesterday and today. So lots of strength. Take a look at the volume characteristics. This upward advance here is occurring on above average volume. Of course, we had a holiday period here, but it is strikingly high. Your higher volume days on up days is another confirmation. So the markets, you do have that nice tailwind behind you of a market that is exhibiting strength. I will say the RSI just dipped above this 70, indicating that the S&P is overbought. But you can go back historically, take a look at this late August into early September period. June was another period. For those that subscribe to my MEM Edge report, I will go into more detail as far as what we are going to be on the lookout, because both of these pullbacks were Uncomfortable, a little bit painful, certainly this September correction. So what we are going to be on the lookout for, but of course we can see that it is overbought. So we'll want to pay close attention to that for with an eye toward a potential pullback. But let's go ahead and take a look at over these last several weeks, some of the shuffling that has been taking place beneath the markets. Let me go ahead. Actually, I'm going to shift it a little this week. I'm going to start with the sub-industry groupings and then go into the sectors. And that the reasoning here is because a lot of these sub-industry groupings that are exhibiting strength are driving their bigger sectors. So let's take a look. This is called a candle glance view. So we have a 2-month daily price chart. And among these industry groupings that I follow closely, I'm on the prowl for these big winning stocks. A lot of them will be in areas of growth, but other areas as well. So within the groupings, we're going to be looking at semiconductor, software, biotech, oil, we talked about that. A newer area, certainly more recently, is transportation stocks. They're on the move. I hope we have time to get into where and precisely what is driving that move into transports. And then small caps and XRT is the S&P equal weighted retail. So from here we have the RSI, I've added that indicator, and then descending order. I want to see very quickly where the strength is within the markets, because of course, once you do uncover where that strength is, if it is sustainable, you want to be able to capitalize on that. So take a look. This is an area for those of you that watch my show regularly will know that I have been very bullish on semiconductor stocks, certainly taking us back. It had a little bit of a dip here. This is pre-election. Of course, once the results came out, a nice drive upward. But I've been constructive on this grouping, really coming out of this bear market. Semis were a big part of keeping people connected. Now, of course, the 5G rollout that is alive and well. But semiconductors really are a very integral part of many different industries, down to manufacturing and so forth. So up here in the forefront, considerable outperformance. The group was up over 5% this week. So that is certainly your strongest. And then from here, we can see retail. Now, this is XRT. I talked about it being an equal weighted retail ETF, but a lot of the names in here, in fact, most of them are internet sales. They have digital platforms. A lot of them are internet sales only. So hence the continued outperformance here among retailers, and then particularly the XRT, which again is all about online sales. Take a look, small cap stocks back on the move. This IWM is the Russell 2000, small caps up 6% this week. This, of course, is bullish. It's all about that recovery trade, that these smaller companies will be provided with stimulus that will help them continue to grow. And also IWM has a lot of bank stocks in its index here. And bank stocks, of course, had a good week. We're going to get into that as we move forward. Talk to you about oil. This is USO, the US Oil Fund up here, just really having a nice week. It's not so easy to see on that chart, but if you were to look at Brent or any of the other crude West Texas Intermediate, they're all really powering to near-term highs. TNX, this definitely bears a closer look. This is the yield on the 10-year. Take a look at this significant advance here. This is all about the move initially this week into treasuries. After the election results, there was a lot of movement, risk off into treasuries, but then a movement in the US dollar also brought buyers. So we can see with interest rates really escalating over this near term, this is another catalyst for bank stocks. These higher interest rates allow these banks to be provided with higher profit margins. So then from here, we can see now the NASDAQ had a really good week. It was up 2.4%. And this is despite the move. Certainly technology was mostly flat. So I do have a listing and really a succinct list of those names and why the NASDAQ was able to outperform, because these big mega cap FANG stocks mostly were down for the week, and the NASDAQ was able to power higher despite those types of potential roadblocks. We can see IBB. This is one of the reasons that the NASDAQ outperformed, up 4.5% this week. So a nice reinvigoration back to new highs for biotechs, which is bullish. This is a riskier trade. And this is what I was mentioning to you before about transports. Again, I did have that RSI descending. So again, this is your strength to your weakness, and take a look, because transports had a very strong week. A lot of this is on data, whether it's rail car loads, trucking, a lot of bullishness that had begun earlier, but is really taking shape certainly this week. So we are going to get into some of the stocks in that area as well. So let's go ahead and take a look. As mentioned, I did want to share with you different stocks in different areas that are either coming out of big downtrends, turnaround plays, stocks hitting new highs, and so forth. So let's go ahead and begin with that turnaround concept. And I'm going to begin with these larger cap names that a lot of you may be very familiar with. At this juncture, it's too early for me from my work, but I do want to share with you what some of these bigger, in particular biotech names that are starting to gain traction this week. For me, I would be more potentially interested once the stock breaks above this 67, this 200-day, but certainly from 63 to 67 for those of you, or very simply put it on your radar. We can see that this week's advance in Gilead pushed the RSI up here into positive territory. And we also have the MACD now up above this net neutral zero. The company did spend money last year. They had 2 acquisitions, and analysts are really bullish on the growth prospects from those 2 acquisitions. And they're also enamored with the fact that the stock is trading at 9 times forward earnings. So you have a stock that is very cheap. Buyers are snapping it up, a nice 4.5% yield. This volatility back here would have me less interested as well, but again, more for informational purposes. Take a look at another well-known large biotech stock. This is Amgen. Not quite as down and out, but we are seeing this nice break back above this blue 200-day simple moving average. Your RSI is positive. MACD up here above that net neutral zero. Amgen is a company that just increased their dividend outlay, which has people interested. It implies a strength in their balance, their profit and margin, and so forth. So the stock is another 3% yielder. I would look for a base breakout here just above that 240 level, and the stock could get on the move again. Here's another big stock in the medical field. It's Regeneron Pharmaceutical. Now, the stock had been a big winner out of the beginning phases of this pandemic. They had developed a cocktail, if you will, that was very effective against those that did get COVID, but it subsequently fell out of bed. And this is very much in line with what we have seen with whether it is COVID related treatments or the vaccine. Those companies, they rally on the news. Let's take a quick look at Pfizer, big move. And then once the announcement and the release comes out, the stocks have tended to pull back, but Regeneron really pulled back. It was up here at 640 and then got down to this 470 range. So very significant drop. Again, too early for my work as far as a turnaround. I would keep it on your radar. Analysts are calling for a 635 price target. They do have a new eczema drug treatment that the outlook for growth there is positive, but take a look. We don't have that positive MACD quite yet. We are just now getting that positive RSI. So again, one to keep in mind. We can go ahead and move away from healthcare, and I'll share with you some other potential turnaround candidates. This is Waste Management. The stock is up this week a little bit on a analyst upgrade, 1.8% yielder. So I would like to see this stock advance above these recent highs. We're getting nice volume. The MACD just limping up here above that net neutral. So a more defined move would make this more interesting. But I do like the fact that it did hit these prior highs here on earnings. So look for a retracement and the formation of a right side of the base. Another well-known name, McDonald's. Again, a little early, but take a look. We can see the stock broke back above this 50-day simple moving average. Your MACD is not joining the party quite yet. Again, use history as your guide, because here is a downtrend reversal back here in July, and you can see that the dynamics are a bit healthier as far as this decisive break of the MACD up positive. Also RSI just turning positive now. But we can see that once the mega caps names such as McDonald's get going, they can experience these nice advances. And this was a very significant pullback. And so a little early, but definitely keep it on your radar screen. One last name, and then we're going to take a quick break here. This is Harley Davidson HOG. This gap up here was all about earnings. The company reported huge growth, 50% earnings growth versus their third quarter last year. Analysts are calling for 104% earnings growth for this year. So this looks really quite attractive, pulled back to this upward trending 50-day, and then is now in the throes of reversing this downtrend with a nice reversal, MACD, bullish black line up through the red. We're going to take a brief break. Lots more to cover. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. Let's go ahead and take a look at some of the movement that we've seen within the various sectors, and certainly this week, rather pronounced given the election results. I'm going to share with you the 1 week view here of the sector performance. Energy sector, highest performer, and I talked to you about that oil-related price movement, that oil is above $50 per barrel. That number is viewed as the line in the sand, if you will, in the sense that if we can retain a price above that 50, that oil-related companies can then begin to post profits. And there's also been other news as well. Again, my MEM Edge report gets more into other dynamics within the energy sector outside of the price of oil that can really drive these stocks higher. We can see a couple of the names up here. I've sorted it by this StockCharts technical rating, strength to weakness. Devon has been a big winner for us. We were able to get into that stock back here just as we broke above this 200-day. This is what I talk about with these downtrend reversals. While this move above the shorter term moving averages is interesting, we can see with Devon, we had 1, 2, 3, but once it gets up above this longer term 200-day simple moving average, in turn, that will pull these other moving averages up. And by all accounts, we can see that it did project and begin this nice uptrend for DVN. So that is an area that I did want to point out to you. Let's go ahead back to other areas as far as sectors this week, because in addition to just pointing out to you where the strength is, I want to share with you how you can uncover potential candidates. So let's take a look. Financial sector, I talked to you about higher interest rates. There are other dynamics at play here as well, as far as why bank stocks are on the move. So we can see really outsized returns for a lot of these bank stocks. And again, up here in the forefront, I see 4 names from my MEM Edge report. Again, we were able to get into these names a little bit early. This is SVB Financial Group based up Silicon Valley. This nice downtrend reversal. It's been in a nice confirmed uptrend. This stock, from my work, I highlighted it back then as being first out of the gate among financials and among banks. And oftentimes, when there's a movement to a new sector, that first out of the gate is then oftentimes will go on to become your leadership stock. Now, here we stand. It's had a very excellent week. I would argue that that uptrend, you're not too late. This is a stock that is superior in many ways. It's not just interest rate related, asset management, investment banking. So we're looking at a daily price chart here. We can see the stock is extended after this week's big move, but I'm going to go ahead and overlay a 5-day simple moving average. So when this or any number of stock really begin to take off, you're going to want to use a shorter term moving average, and any pullback in this case to that 409 level would be an ideal buy point. So let's go ahead and go back to that listing among these bank stocks so I can share with you other ways, because this can be really daunting with some of these bigger moves. So in some cases, you may want to just drill down, take a look at some of these names that haven't had as explosive moves. This 86, as far as this scooter, in other words, it's not already up here close to that 99. So let's go ahead and take a look at some of the names that are certainly well into their moves, but not as far advanced. So this is Pac West, PACW. We can see it was in a go nowhere environment for a good 2 months. And then this week, that nice base breakout, big volume. This MACD had that bullish crossover, black line up through the red. We're certainly overbought by any standard, but again, if you drill down lower among, you still want a scooter that's above 70 to imply and indicate that the stock is technically sound, but it's not going to be just out and out of the way up and extended. But this one is a little bit extended. This is Zion, another big gap up. But overall, these volume characteristics are indicating that this move into these bank stocks is just getting started. We can go back to the metrics, for instance, with Zion and see that we're not even at these prior highs. A little bit extensive here. This one was up 12% for the week, but we've had other periods where that has been the case. I'm going to pull up a monthly chart, and then we're going to take a look at the industry group on a monthly chart. And you can see this is the recovery out of that 0809 banking, led by banking stocks. But historically, they have had periods of significant moves. So definitely not behind us just yet. This is XLF, and I'm pulling up the monthly on the financial sector because it is going to highlight a phenom that took place among a lot of the sectors that are doing very well right now. Not very easy to see, but you can see this big bar, that big advance. This is taking us back to the election results, Trump 2016. And financial stocks were up 14% for that month of November. And then they did go on to advance higher beyond that. So we're seeing similar dynamics when the election results settle, as far as areas that are anticipated to advance beyond that. Let's go ahead. I want to move on to another area because I mentioned I was going to share with you new highs and breakouts. So I'm just going to share a couple of stocks from both of those concepts as far as identifying when stocks break out of a base. Are they poised to trade higher? And we're looking at here, I'm going to pull up a daily price chart here. It's West Pharmaceutical, WST, and take a look at this nice base breakout that took place this week. This has been historically was a big winner for my MEM Edge report. We did remove it once it broke decisively below this 50-day. The MACD turned negative, as did the RSI, but we did get back in last week as the stock began to form potentially the right side of the base. We were anticipating this base breakout, and it did in fact come to pass. Not really easy to see with this chart, but the volume dynamics were there as well. You want this to occur on nice heavy volume. It did also coincide with this MACD turning positive. So I would put this on your radar. They're very involved with injectables and with the vaccine. And prior to that, they were all about helping with drug related delivery systems during for treatment for COVID, and still are as far as that area of growth for this particular company. Another stock that is and has broken out this week, actually, I'm going to share with you an ETF because this is something I did not want to miss covering with you today. Is Vibrancy. While other software stocks sold off, this is HACK. It is the cyber security ETF. And in mid-December, we had one of the largest cyber attacks on US government agencies from Russia. They were able to infiltrate systems. And so we did see a big move up and then a subsequent pullback. There's anticipation that corporations are going to put cybersecurity measures at the forefront of spending next year. So we did see this nice pullback, and then the ETF is resuming its potential uptrend. This is an area that we also, with my MEM Edge report, were in the stocks prior to this big move. This is CRWD, CrowdStrike, very big in cybersecurity. We were able to capture this nice base breakout and advance. But more important for today is similar to that ETF, it pulled back to this upward trending 21-day simple moving average, and it's now poised to break out of that nice base. So I wanted to point out that particular stock. One other one that is in cyber security is this Palo Alto, PANW, and we can see that it had this nice gap up here, earnings related, nice follow-up uptrend, and then of course the attack mid-December propelled the stock to new heights, pulling back again to that 21-day and potentially resuming its uptrend. So let's take a look. I talked about other areas and other stocks that are potentially breaking out, but I also wanted to look at stocks that hit a new high, and we are seeing a number just really outsized strength over the last week. And names such as Roku has been a real nice winner here. The company did buy the rights to the TV for the Quibble show, which is viewed as quite bullish and positive for their growth prospects. So what I wanted to share with you is when these stocks hit a new high, they're really propelling upward with superior strength. oftentimes it can be quite helpful to drill down your chart view. I know a lot of you that are longer term might not find this as interesting or attractive, but it will help you as far as identifying whether that stock is still in an uptrend. Is there still potential upside? So this is that advance this week to new highs. On this 1 hour chart, ROKU did stay above these shorter term simple moving averages. While it is a bit overbought, your RSI remained positive, as did your MACD. So that's really going to be quite helpful when you are seeing these stocks with these explosive moves to new highs. Target is another one that you might want to go ahead and drill down to that intraday chart to help you with your intraday, your analysis as far as the uptrend. I'm going to leave it at that. For those of you who have not already, go ahead and take a 4-week trial at a special rate of my MEM Edge report. You'll receive further insight into these shifts that we're seeing, as well as select stocks that are poised to take advantage. Have a great weekend, everyone. See you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.